Hello, I'm Alasdair Macleod and I'm here on behalf of the GoldMoney Foundation. And with me is Juan Castañeda. Have I pronounced it correctly?
Yes, you did it.
Thank you, Juan.
Yeah.
Who is a senior lecturer at UNED University in Madrid.
Yes.
And you also have a website, theoldladyofthreadneedlestreet.com.
Yes, exactly.
Why did you pick that name?
Well, because I am a fan and a supporter, if I may say it, of James Gilray's work in the 18th century. I think he's a master of the caricatures.
Absolutely,
And
yes.
I think that you can even teach monetary economics just following his drawings and sketches.
I hadn't thought of that.
Yeah, I think that's the next thing that I'm going to do in my university, I think so.
The thing that's, I mean, we live in very interesting times. It's sort of Chinese interesting, like it's the sort of interesting you don't really want in a sense.
Yeah.
But the root of this, it seems to me, is the difference between sound money and weak money. Mm-hmm. And I'm just wondering what your take is in terms of how far we've moved away from sound money and to what extent the problems we have today can be laid at the door of fiat currency.
Well, that's a very
big
good question. Yeah, yes, indeed. It is a question that I should have developed in my thesis. Yeah. Well, the thing is that I do think that most of the problems we are suffering since 2007 come from the fact that we are living in a 100% fiat currency system. And we don't have an anchor to preserve monetary stability. So the difference between a sound money and a weak money systems, in my view, the basic one is that under the sound money system, there is a rule that we are giving to the central bank to preserve the purchasing power of the money. This rule can be put in terms of the gold, silver, or gold and silver together, because under that system, the gold standard system, the central bank could not over-issue means of payments in the economy, because at the end of the day, they had the obligation to redeem all the paper notes people wanted to give to them, and in exchange they had to give to the people the gold and the silver required. So
people with gold and silver would actually be confident that the money is not being debased, because it effectively, a complete standard takes it out of the hands of government. Exactly.
Well, not completely, because during the classical gold standard years, the government fixed the price of the gold in terms of the currency, and following the Milton Friedman's classical critic to the classical gold standard, if you are a supporter of the free market economy, you don't want anybody to fix any price. But obviously, even though taking into account this flaw of the classical gold standard, at least the government couldn't take monetary policy in its hands to do whatever they wanted to do, to finance recurrent deficits, for example, as we have seen in the last 50 years, now that the gold standard has been totally abolished.
Indeed, and it's allowed governments to finance themselves purely by expanding either money or the quantity of credit in the economy.
Yeah.
And that really, I think, is what's going on with QE in the UK at the moment. We've had 2 rounds in the United States, but there's still an open checkbook there, isn't there, really?
Yeah. I think that the problem is much bigger in the case of the US, because of the quantity and the quality of the key expansionary measures. Particularly if you take a look at the last figures of the M4 growth or M2 growth in the case of the US, and the growth of the base money, it is huge. I think that the money supply in the broad sense is growing at roughly 10%.
Yes, well,
annually.
Absolutely, and I recently produced a chart on true money supply or Austrian money supply, and I think it was growing at something like 14–15%.
Yeah, absolutely. And base money is increasing even more, like 20% or something like that. So this is a symptom that the central bank is issuing a lot of money, is pumping money into the economy mechanically, here you are, this is the way we have chosen to exit the crisis. It is a very bad way.
It's really the destruction of money, it seems to me, that's going on, because as long as you have interest rates at 0 to 0.25%, and you have an inflation rate running, if you believe the CPI figures, at 4%, if you go to shadowstats.com, you're looking at 10% or whatever figure it is, then every day that passes you are destroying capital, you're destroying savings. And it seems to me it's a funny way to go about things. I mean, where's the recovery going to come so long as you continue to destroy savings?
Well, that's a very good question, because this is not the way to exit the crisis. I totally agree with your point, because with this way to exit the crisis, we are just delaying the adjustment of the economy. Because first we need the economy to adjust to the new situation. We are not going to grow anymore based on cheap credit. That's what I think. This is not the proper way to foster credibility and to foster economic growth in the future. So what the Fed is doing is just to finance the deficit the government, the federal government is running in the last years.
It's the unstated objective, isn't it, really?
Yeah.
What they're doing is not so much, well, it's partly, I suppose, keeping the banking system from, balance sheets from imploding, but it's also financing the government deficit. And one wonders what level interest rates would be if there was no printing money purely for that purpose.
Well, yes, because the Federal Reserve is not only supporting the banks, as you said, as the lender of last resort of the economy. They didn't want to go through the same experience as in the 30s, where I think that the money growth in broad terms declined or fell by 30% in
yes,
in
it was
3
particularly
years.
bank credit contracted.
Exactly,
yes,
exactly.
yes.
They didn't want to repeat that mistake. Well, I agree with that, but they go even further, and they are giving the money to the treasury just to spend to pump public money into the economy. This is the bad way to do it. So they have the privilege that they have one nation, one treasury, and one central bank supporting the whole plan of the government. So I think this is a mistaken way to go through this, to try to overcome this crisis, and they are going to suffer the consequences, I think, in the near future.